Great. So yeah, let's all take a seat. Now it's of course a tough thing to have the panel before the lunch break. So thank you all for staying with us. I'm sure it will be a quite exciting panel. So yeah, the topic of the panel is, does the industry need a digital programmable euro? And we talked about the digital euro quite a lot. And this panel is really to talk with industry practitioners to talk about the aspect of programmability. So it's more the programmability focus here and not the CBDC per se. But before we go into the discussion, I would just very briefly ask you all to quickly present yourselves. So as we just have 25 minutes, please be very quick. But yeah, maybe starting with you, Victor, and then just taking the round, and Max like last at home.
Sure. My name is Victor Ammer. I run Trustedy as a regulated custodian, but also a couple of other firms in technology. Another one is a regulated asset manager in Switzerland. But I'm actually quite passionate about building inclusive payment tools and methods for the global community.
Yes, good afternoon. My name is Heinz-Günther Lux. I'm from Evonik Digital. This is a digital arm of Evonik Industries, which is a global chemical company. And in parallel to that, I'm author of the book Blockchain Economy in Transition. And we have real practical experience with programmable money. We transferred already 3 million euro between Evonik and BASF in practical terms. So I think I know what I'm talking about when it comes to programmability in smart contracts.
Hi, Seamus Donoghue from the VP of Strategic Alliances at Matacheco. We're a technology company that provides the core infrastructure largely to financial institutions to enable them to kind of securely integrate crypto assets, including managing smart contracts and the secure governance of all those processes related to smart contracts.
I'm Harry Behrens. I'm founder and CTO of Power and Mobility and Blocksmove.com. We're a spin-off of Mercedes-Benz Mobility, and we apply decentralized tech to mobility and where mobility meets the power grid. So that's why the company is called Power and Mobility. And obviously all of that needs to be settled and paid for. So part of the platform and part of what we're building is what we internally would call IBAN to Ledger, which will probably be the topic for later.
Okay, thank you very much. And last but not least, Max.
Hi all, hi to the rounds. Maximilian Foster is my name. I'm co-founder of Cash and Ledger. The company is taking care of PayPerUse business models, asset as a service business models, and all in that regard. Obviously, we are bringing in perspective the industry applications for programmability of money and the programmability of monetary streams.
Great. So thank you very much for the great introduction of yourself. So before we talk about like use cases, what will be kind of the key of this panel today, I would start with like a definition, because what's really missing about programmability is that all people mean different things, right? When they talk about programmability, and I just experienced a few formats where it has to be really defined. So maybe here a question to you. I mean, you all have had some practical projects with it, and open question to everybody. How would you define programmability in the context of payments?
Well, I'll start. But essentially, if you compare cash-based tokens, a token is essentially the quintessence opposite of accounting, because you cannot claw it back. You transfer it, and then that's it, and there's no second leg for a service. So we are essentially talking about book money here. And so what you need to be able to do is you need to be able to program the transaction which generates a liability such as accounts receivable and accounts payable, and in the ideal world, carry that forward all the way to the cash settlement. So all of this is run by one fabric of code. So you deliver a service, it gets verified, it gets booked, and it gets settled. So in the ideal world, that is what I would phrase as programmable money.
I think this is a definition of a programmable payment, not programmable money.
Okay.
Yeah, programmable money. First of all, this morning was very interesting for me, and I must say there are a lot of deceptive packaging. In German, Mogelpackungen. Mr. Deal this morning said trigger method. Trigger method is nothing else but a macro who is triggering a payment in a traditional form. And Jonas, it doesn't fit to a slide with a headline digital money. Trigger is not digital money, sorry. When we talk about functionality, functionalization of money, this is when it starts when we talk about programmability. Programmability means we as an industry, with our industry partner, can define the usage of the specific money or the amount of money depending on rules which are programmed in a smart contract. And Mr. Deal this morning said, trigger method cannot do programmable smart contract, and therefore it can do payments, yes, but it cannot define rules on which the payment is processed, and even more, the amount of money which will be transferred, which could be based on the performance of a certain specific action, cannot be included there. So programmable money is much more than payment process.
And in this context, of course, blockchain technology, as you mentioned, smart contracts really plays a key role as well, right? So what do you say is this role? Because often people also say, hey, we do have like bank deposits, like standing orders, you know, this is all some kind of programmability. So would you also say this is programmability? And do we need a DLT for this, to allow and to enable this programmability?
Yeah. So actually, I really like what you just said. Our experience, and maybe first thought before that, we think about money as an idea, right? And we have different understanding of money, obviously. The money that is on your bank account is obviously an obligation of the bank to give you the funds, right? And the bank can all agree with that or not. I'm not sure that it is correct to say that all of us need the same money, even speaking about euro. Something that we experience from the industry, that people actually like to transact in the way and the means of payment that they support, which may support their value, which may support their community, et cetera, et cetera. So I think coming to your question, whether we need blockchain or DLT for that or not, I do say we need, because you can build customized money, right, for those communities, but you still can be interoperable with others, right?
So it's the interoperability and also the flexibility that smart contracts provide here as a key, or?
Exactly. And of course, you can empower automation, right? Something that can reduce costs, et cetera, et cetera, et cetera. So I think for those use cases, blockchain is crucial. I do think we don't have all the answers yet. I do think that we're at the very beginning of it, and you may disagree or not, but I see that more and more people like to transact in something that they support. It may be euro, but it may be also something, a token that they like. And something that we did yesterday in Barcelona with transacting with Celo. So if someone transacts with the currency that he supports, the values that he supports, it's a totally different experience. It's a game changer for him. Of course, we have to ensure that it has to be, we have to ensure accountability, et cetera, et cetera, et cetera, that he receives the value that he wants, et cetera, et cetera. But there is a different connection to this means of payment rather than just to euro. So this is something different.
I would just add, basically, there's been a lot of discussion over the last couple of days around tokenization and all the opportunities of tokenization. But there's obviously a lot of bottlenecks in the space that one side lives, let's say, on chain, in smart contracts. The other side is in a physical form in many cases and very slow. So I think whether it has to be DLT or blockchain or not, I think is unclear, but you need to deliver some kind of analogous properties of like real-time settlement and finality of transfer that you can then align with, let's say, the token space. So these opportunities that we talk about, these use cases, can actually be affected, because right now they're kind of much more, we have a vision of where that goes, but we're not there basically, because we're missing one leg.
I'd just like to get back to the original statement by the colleague here. So, sorry for your name? What? Your name, I spoke.
Heinz.
Heinz, okay, by Heinz. So I beg to differ again. If you talk about what is money, and money is essentially, I think that is one thing that we can all agree upon, it's debt. And you can express it in cash, and then the central bank owes you that much, but it's essentially debt. And debt is expressed always as a liability, and there's always two sides of this, which is why we have book money, and book money is what counts. So explicitly, when payment is about the cash settlement, it's the most trivial part of money. It's truly the most trivial part. And what you need to be able to program is essentially commercial transactions with their logic if you want to achieve programmable money, which means at the end of it, I have an accounts receivable, you owe me money, you have an accounts payable, you know that you owe me money, and hopefully due to some consensus magic, both of us know what the other side knows, and there's a bunch of notaries or validators that can stand here and say, we agree to that. And that's essentially, if we're able to do that, and we're able to integrate this seamlessly by software, smart contracts whatever other mechanisms you might use, but on which we have consensus, into the actual original delivery of what's behind it. You deliver to me, I don't know, 10 kilowatt hours of power. I got a smart meter which is checked, and there's a secure enclave, and it's got an identity, and this thing has now proven that I just received 100,000 kilowatt hours. At the end of that, ideally, without human intervention, there's an accounts receivable, accounts payable, no payment at this point. That reflects symmetrically, fully consolidated, the fact that we owe each other that amount of money. You can actually stop there and say, I've done my job for programmable money, because the payment then, if there's consensus on those two liabilities, is trivial. You can just get yourself any kind of commodity payment operator and tell him every day, every week, every month, use netting off, do it position by position, whatever feature you prefer. But in the end, why do you need programmable money? You need it to automate commerce. That's all you want. You need it to automate the liabilities that incur when you deliver services. The rest, I believe, is metaphysics.
And I think this automation, this is really one of the game changers, right? And what the key use cases are about programmability as well. So maybe turning next to the use cases and maybe turning to you back home, Max, is basically which use cases would you mainly see for like a programmable euro, and then of course also turning to all of you afterwards.
Well, to start off with, and it was great to listen to this insightful discussion about it. Like, I would still separate it. I would just take the contrary view and would just say then we're not talking about programmable money. Like, programmable money, in my point of view, and I would like to cite the Bundesbank here, is to say like it's everything which is non-discretionary, everything which is rule-bound or non-rule-bound. So what does it mean, practically speaking? Like, think about a use case such as, for example, PayPerUse. So PayPerUse means ultimately you book a good and you pay for what you use. So basically, take an example of a tractor or a hydrogen fleet or whatever you have certain parameters which are like implemented. So you either pay by kilometer or by driven hour or by whatever you have, basically. So ultimately, if you think about this use case specifically, then you take it into consideration that you have a variety of parties being involved in that specific use case. Because for the simple transaction, so you owe the company who lent to you the vehicle on a pay-per-use basis, you just owe a certain amount of money, and you can just send that over. You don't need a blockchain for that. You don't need basically even a rule-bound basis for that or programmable money. It's just a simple transaction. Where you would need programmable money is in the second phase of this use case, because ultimately, if you think about the use case again and take the tractor, for example, if you have a flat tire, this flat tire automatically triggers an insurance claim. But the insurance doesn't know whether you basically have a flat tire or not. So basically, you have a third party being involved in this use case because ultimately the rentee, so the farmer, basically in that sense, must show that he has a flat tire, and this must be then claimed by the insurance holder. So basically, what you have is like a kind of like a three-bound party system where you can then trigger autonomous transactions based on an insurance claim or based on a damage which occurred to the vehicle. And this is where you basically need automation, because this is a non-rule-bound transaction, because you don't know whether you have a flat tire or not. But once this event happens, you automatically trigger a transaction. This transaction must be predefined. And that's where you need basically this programmability. For simple cases where you just have simple accounts payable, accounts receivables, I wouldn't say that you need actually kind of like any kind of programmability. But for the next automation phases, which you just described with the insurance company being involved in this case, and you basically want to trigger more and more automated use cases in that regard. Therefore, you would actually need programmability, and therefore you would need actually also smart contracts in that sense. But for everything else, like for the simplest version of that, you wouldn't need any kind of programmability, and I would not even call it programmability. I would just say it's simple, plain vanilla commercial bank money, which is then triggered either if you talk about commerce on PSD2 or on AVIX level, like on the accounts.
So having this pay-per-use, definitely, like as one example is the tractor that you provided. Maybe bringing the question to you, and maybe starting with you, Seamus, like what would you say are further use cases in this context where this programmability can be powerful? And yeah.
Well, I mean, I look very much, we deal very much with the security services space, and I think the first use case they're looking around is the whole management of a life cycle of a bond, for example. Basically, there's all sorts of payments in there, the corporate actions, etc. These are very manual processes, and we see initiatives in Asia, for example, with MarketNode, trying to automate that whole issuance, payment agent, etc. Process. And I think what's lacking is the other side is the programmable side on the let's say the cash side, however we want to call it, programmable money, whatever the definition. So I think there's a lot of basically let's say, institutional use cases that I think are just very much looking for a solution that's not just a bespoke to that one use case, but it's more of a mass adoption that can be industry standard that they could start adopting to scale this.
Okay, and Heinz, I mean, you guys have been done a real world use cases, right? And you said in the millions. Like, maybe you can elaborate a little bit more what you did here and where you see the main use case for programmability from your perspective.
Yeah, first of all, to answer to your question again, we heard this morning the money is mine. If it's a banknote or if it's on account, and now I expect that I have a money which I can program and I can define the usage of that money. And it's the same money which is coming from the central bank. It's not a new money which was formed by somebody. It's a euro. So what can we do with a euro? We can link the euro to a physical asset. We can develop new concepts of distribution. We can develop, and that is what we have done in the interaction between two companies. We did it together with BSF. We will onboard another company now, that we define the rules, why and how payments are done in real time from wallet to wallet, because the money is in our own wallet. The euro is in our own wallet. So, but the money is still somewhere. And therefore, all the arguments I heard from central bankers this morning are also not true in our case. So we can get the functionalized money. And if we have that, we can think of even further new finance products. Because if I have linked the money to an asset, I have the value, and this value can be develop new financial products. Today we have an invoice. Supply chain finance is based on an invoice which is approved, and the approval takes time and effort and things like that. This can be done in a completely different way and can develop completely different new ways. The key topics, Max said it, are the IoT things, the machine-to-machine things, the fractionalized payments, things like that can be even thought further through. But I want to be able, and this is what we do, to design the physical product and the business case together with the money in a way that I get develop dynamics for the payment at the end, that it's an account-to-account transfer.
Harry, I assume you will want to respond to that? Okay, but then the question also to you, like which use cases would you primarily have in mind?
Well, I tend to be pragmatic, right? Because whatever we imagine now, we create new realities upon which new possibilities emerge. So I can only look until the next bend of the curve. So right now, pay-per-use is definitely whether you call it programmable money or not, but pay-per-use is where the concept of money, the concept of payment, and the concept of smart contracts mesh very, very beautifully, especially because pay-per-use is small, small, small. It's potentially in the IoT world, many, 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 and you cannot afford to use Girobank for that kind of transfer. It'll kill you. So economically, and all of these use cases, a lot of them are extremely low margin, so this needs to be frictionless. So anybody who solves that problem, call it what you will, it doesn't really matter what you call it. Anybody who solves that problem has done the industry and commerce a great service. And at the end of this, we are all companies here. We're not pure crypto players. There's not a single pure crypto player in this room here, which means we have year-end closing, which means we have audits, which means we have one form or the other of a general ledger where the money is actually counted. As far as a company is concerned, it doesn't matter what you hold in your hand. It doesn't matter what you hold in your cashier. The only money that your taxman will recognize, the only money that your investors will recognize is what your general ledger tells them, what you have on the balance sheet, and what comes in from your P&L, full stop. That's the only money you have as a company. So ultimately, if you manage to enable these pay-per-use, highly dynamic use cases by which you bring IoT into the commerce, by which you essentially do what 10 years ago people called Industrie 4.0 in Germany, and you actually make it reality, and you manage to do that, again, simply software. So at the end of it, no human intervention, no 4I principle, no middleman, boom, it's in your general ledger, it's in my general ledger, and from there, it's in your bank account, it's in my bank account, it ends up anyway, there's infrastructure, it is automatically reflected into the central bank and into the Bank of International Settlements, so we don't even need to worry about that. Put it into the IBAN, and the existing infrastructure already has it straight away. We don't need to worry about how to mirror it into the central bank. The existing infrastructure does that just fine.
So basically frictionless, efficient, and automated, right?
Yeah.
Kind of here.
I mean, just pragmatic. I'm not trying to make a philosophy out of it. I'm just trying to present solutions.
Well, I would agree on those points. Although it gets very confusing if you have a DAO, right? And your own closing, et cetera, et cetera. I think the whole discussion gets, well, it is a technical topic, but it gets very technical and institutional. I think we should still remember that like the consumer should actually benefit from that, right? There was actually real human behind that. And if we really want to address real world problems, then everything that we build has not to be for the sake of blockchain or DLT or just trying out new technology. It has actually achieved, reduction of cost, reduction of, friction, right? And that's what we should target, right? I mean, all those things, use cases are great, but I kind of feel that the whole human component gets left out because we start to think, institutional, we start to think central bank, et cetera, but at the very end, it has to come down to someone who goes to his Aldi maybe, or whatever, and pays, right? Or it has to go to some business-to-business interaction that has to go, cash against delivery, et cetera, et cetera. So this has to work, right? And I still think that the industry didn't really did a great job so far in terms of efficiency. If you look at blockchain industry at all, it's not efficient at all. You actually have higher fees sometimes than the traditional financial industry. And that's a mess, and that's something that we have to fix, right? Because that's not how we're gonna win this game. I just feel that many times people use technology and say, hey, we used it. Great. What's next? How it can actually benefit, the people who deal with that on a daily life.
And maybe as a last question, Max.
Jonas,
yeah.
If that is all right. For the pay-per-use business models, I think pay-per-use business models, and I think this just comes a little bit too short, is the most complex version of a business model you can have. Because it's what we always figure out, what we have in discussion right now is the transaction part of it. But there is a huge part as soon as you start talk about assets and you talk about asset as a service, equipment as a service, and all of it such, which is still in its infancy. If you talk about that, you need to take into consideration that it's a huge risk also for refinancing your assets. Because ultimately what we just described here is simply the transaction part of it. And the transaction part of it is a very small part of it because ultimately you have a liability which is then somehow kind of like cleared. So the farmer owes the tractor company X or Y. And how that is transferred is basically just obvious. So you can just basically send money over. But what's a huge part of it is, and this just came too short in our discussion right now, is that you need a refinancing part to it. So you need to think about how can we refinance the assets on your balance sheet? Because ultimately you transfer the whole business model. You're not selling assets. So you don't push them off the balance sheet and they're gone. You basically keep them as an OEM on your own balance sheet. So you need to think about a solution where you don't blow up your own balance sheet and become financially not maneuverable anymore, but you think about a technology or a solution which is not even technology based, which is just plain vanilla refinancing, how we actually enable a scalable pay-per-use business case. And this is something which really needs to be taken into consideration because, as said, the transaction part is a problem, is causing headaches, which is why there is tons of opportunities out there. Programmable money is one of them. We have request to pay, which is a new standard form, which is coming in later this year. Whether it's good or not is not my point to discuss here. But ultimately, there's a lot of pain points, and transaction is a small part of it, particularly for pay-per-use and asset as a service business models. Just to clarify that. And then ultimately, having said that, it's a pure B2B use case. So ultimately, if you think about this, you need to take into consideration again that you're into a business-to-business field, because ultimately businesses should start to focus on this kind of usage-based invoice billing mechanisms.
Yeah. And if you allow me to add one point in the real world of our business, we have invoice verification. Hundreds of people who have to check, is the amount correct, is the reference number correct, is everything correct? And with the digital integration, from a programmable money point of view, because we functionalize not only the amount and the function, but also the content, we can fully, and we realize that, keep the euro in the whole business in a closed loop. It's no media breaks. We have an automated, fully automated process of settlement of the payment on both sides. And this is something which is very, very important. And more than that, blockchain provides the proof that this business really took place with the partners. So all the auditors you mentioned are gone. So these are things where we have significant cost improvements in future.
I mean, you can talk the same thing in finance about reconciliation. It's an industry on its own, basically.
Exactly.
Yeah, I think this is really nice closing words and really shows the potential of the programmability. So unfortunately, time is up and people are hungry for the lunch break. So we could have continued this for hours. So thank you very, very much for being here, for sharing your insights. I think it was a very interesting discussion. And yeah, also giving over to you, Marcel, again.
Oh, thank you very much.